Hello friends, and a very happy Independence Day to you all. And these are my Independence Day bonanza picks for this year, as I always bring to you on different occasions every year. So this time around, these are my five of the best picks that you can probably buy from a 2 to 3 year perspective and gain a lot of traction in your investment portfolio. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about these companies, just to tell you as to how the criteria has been for picking up these companies. These are established brands and strong managements, diversified at market leaders in their own space. They have low debt, no pledging whatsoever, or virtually no pledging whatsoever, strong institutional holding, and solid return ratios and numbers. How to put in you can say allocation into these stocks? Put 10% in each of these stocks and mix it with your large stock portfolio. If you have the Asian Paints, Pidilites of the world, you can mix it with these kind of companies and buy over the next 2 months, August, September, and hold for the next 3 years at least. I think it can give you around 25% CAGR. It would give you a lot of traction over the next three years. Let me know your comments as to which stock you feel might not give such returns. So the first one in this list is Jubilant FoodWorks, a stock that is probably forgotten for the moment by large investors and you can say traders and everyone else after the resignation of the CEO. But they have now the new CEO put in. The market cap is around 38,000 crores. A very decent companies, and now with inflation subsiding and things looking much better. I think in the next 2 years it could go up 50% because inflation has peaked out, in my opinion, as was expected that by September it would happen. And plus, you have the IPL season, you have the T20 World Cup in the December quarter, you have the IPL. Earlier than what it used to be in March, beginning in March. So a lot of triggers. It would be a longer IPL and many other factors. So over the next 1 year or so, I could see Jubilant Foodworks do a lot better than what it has done in the last 1 year. It manufactures a number of food items, primarily various types of pizza. Domino's is one of the biggest brands of you can say Jubilant Foodworks, and they have ventured into other items like salad and biryani and recently by acquiring firms. So I think it is becoming more diversified food delivery company. And you have to understand that oil prices, rising oil prices was also a factor why Jubilant got hit big time, because most of their business is through deliveries. So I think things look up now, and these are very good levels to accumulate. Probably 60-70% upside over the next 3 years is a possibility here. Second in this list is JAMNA Auto. It is into the auto components manufacturing business and boasts of marquee clients in this space. Primarily, they make tapered leaf and parabolic springs for commercial vehicles, but they have global presence with clients across Europe. And the fact that it has fallen from 145 to 115 is pretty evident because of the kind of situation we are facing in UK and some parts of Europe in terms of recessionary pressures. But over the next 3 years, I see buying around 100 would be pretty good in order to have a traction of 60-70% again, a level of 200 possible over the next 2 years, and sorry, 2.5 years, and even 220 230 possible over the next 3 years or so. Third in this list is LAURUS Labs. It has come back into list many times. The stock has not performed that much over the last 6-8 months, but now it looks like, even on technical terms, breaking out. It is a fast-growing mid-cap API firm in the pharma industry. High return ratios with improving margins, and things are now looking upwards with the kind of numbers in the June quarter that it has come out with. A boast of leading clients and pipeline has corrected from the top. So So you need to understand that it's not at 720, 730, went to 480, uh, had a lot of consolidation around those 550, 530 region, and now is breaking out probably on dips to 550. Is a good buy. A market cap of 32,000 crores at the moment, but around 550 is a very decent buy. Again, a stock that could easily, you can say, grow 25% CAGR over the next 3 years or so. Fourth in the list is ACRYSIL. This is one of the stocks that I would say that has flattered to deceive. I mean, trading at only about 20 times FY23 earnings. The earnings have been pretty good in the June quarter. It's a top home improvement company, yet it has a competition with Hindware Home Innovation and many other companies. But the kind of numbers it is producing, with its business in UK, with its business in most parts of Europe, Latin America, Asia, is quite good. Very decent numbers, and the forecast by the company in their presentations is pretty commendable, and it looks like that if you can buy the stock or hold the stock at these levels, buy it around 600 or so, there's a very good traction possible over the next couple of years. 50% possibility of an upside of 50% is there. Valuations are attractive at this moment. Value, it's because the stock ran up by January. It did run up, but now around 600, 620 looks very good. Strong results and leadership in specific segments is a trigger that would take the stock even higher. So I believe that it's a good buy around 600. Remember, it has corrected 30% from the top as well. JAMNA Auto is down from 145 to 115. So all these stocks that I have picked are down a lot from their tops, and that's why these are looking very attractive. You have Jubilant Foodworks that is down around 40% from the top. And finally, I have Vedant Fashions. Now, this is a stock I looked at closely just recently, and maybe this is something that one should buy on declines, not at these levels, but on declines to say 1100, 1050 or so. So, a 10 to 15% decline from these levels will look very attractive for the company. It's a big wedding fashion clothing brand. Maneuver is an established brand for itself, and exceptional profit margins of over 40% for them. In fact, operating profit margin for this quarter has been around 50-60%, and valuations are stretched, that is for sure. Currently 75-80 times. Probably if you can get it anywhere below 1100 would be very good to buy into it. It has a very good long-term moat over the next 3 years. With the pandemic gone, I think numbers are set to improve appreciably from FY23, from this year onwards, and profits have increased smartly over the last few years. That's what I have seen. So I think a business that is set to grow more in a nation of wedding, I think over the next 3 years, I think 70 to 80% upside over the next 3 years is a huge possibility here as well. So this was a video on the best Independence Day picks this time around. Please like and subscribe my channel and hit the bell icon so you get my video straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.